Hello and welcome to the Blytheway Mining Show, coming to you live from Core Finance here in London. I'm joined down the line by Steve Curtis, Chief Executive Officer of Caledonian Mining, who yesterday had an update to the market. So with no further ado, good morning to you, Steve.
Good morning, and thanks for having us on your show.
Absolute pleasure. Can you just talk us through the increase in the resource base at Blanket that was announced yesterday and potentially why this is good news for your company?
Yes, certainly. As people should be aware, because we've had a lot of communication around it, we are embarking on an expansion project at Blanket Mine, which is effectively building a new mine below the current operating level, which is 22 level, 750 meters below surface. Blanket's been operating for 110 years, so everything in our various ore bodies above 750 is coming to the end of its life. So to extend the life of Blanket, we took a decision in 2014 to sink a new shaft and to take the shaft down to 1,080 meters and effectively build a new mine below the 750 meter level. We had information about the extension of the ore bodies when we made that decision, but a vast majority of that mineralization was in the inferred category. We have been very active doing deeper drilling, and because of the nature of our ore bodies, which are nearly vertical, your successful drilling has to be done from depth. So we have had to create drill cubbies, the opportunities for the drilling stations to be established, and therefore for the geologists to be able to set up their program for drilling. So we've arrived at a stage now where we've had an extensive drilling program, and having evaluated that, our geologists tell us that they have been able to improve the confidence in a large amount of the inferred, and they've moved to the M&I category. And the last time we published a resource update was December 2016. Mm-hmm. And since that day, we have produced probably 45,000 ounces, but we've still managed to increase our M&I resources to a level which is 6 or 7% greater than it was in December. But more exciting is that there is a large increase in the inferred resources deeper in the structure that we are going to be embarking to open up, and there we've got over 40% increase in the mineralization. So that vindicates the fact that that we are putting this shaft down. It also gives us a high level of confidence around the future life of Blanket Mine. And traditionally, Blanket has had a very good conversion rate between resources to reserves and from inferred up to M&I. So we are very confident that having identified more mineralization at depth, and we haven't been able to get to all the ore bodies. We've got 4 or 5 significant ore bodies. We haven't been able to do exploration in every single one of them because we have restrictions around creating the cubbies. So what we have explored and what we've drilled out quite successfully is what we call the Blanket ore body. It's one of significant size, and as you can see from the results, we are putting on the table that there's a lot more mineralization down there. It makes us excited about the future of Blanket, and we look forward to converting that into more M&I and into extracted gold.
Fantastic. All sounds good over there in Zimbabwe. But just moving on, following this news, do you think there'll be a change in the life of mine plan, the LOMP?
Yes, yes, there will be, because from just a pure time perspective, we took the proposal of this project to the board in 2014. Mm-hmm. And in 2014, we had a base of information from which we had a life of mine plan developed. The project ran from, let's say, time of approval, 2014, through to 2021, where our target is to produce 80,000 ounces. And we are pretty much slap bang in the middle of that now. And we have a large amount of new information against which we can recalibrate our decision and decide, are there some more options that have been put on the table? Are there things we should consider? So yes, definitely, the life of mine plan will be reevaluated based on this latest information. We've got tonnage, we've got grades, and we've got a very different profile of what the ore bodies look like. So it's exciting that in the definition of this reserve and resource statement, we've been able to enhance our geological models because we just know more about the structure of these ore bodies. So there's no doubt in my mind that we will review and put out a revision to the life of mine plan that we put out in 2014.
Good stuff. And speaking of revisions, is the company still on track to hit its revised end-of-year guidance? And what does the rest of 2017 look like? And also, adding on to that, can you also just talk us through liquidity issues in Zimbabwe?
Yes, certainly. Okay, so we've announced our Q3 volumes, production volumes in a production update. They were a record quarter production, so that is a very good place to be. The first half of the year was tight, and that forced us to put out the guidance of 52,000 to 57,000 ounces. Having had a very good third quarter, we tightened that projection for the end of the year to 54 to 56. And we see no reason now not to continue with that guidance. So we are confident. We've got a couple of months left in this year, and traditionally the year end results are heavily affected by Q3 and Q4. We've got a lot of public holidays in the early part of the year. We've had a lot of logistical issues at the mine because we're operating out of the one shaft on the one tramming level, 22 level. So we've learned an enormous amount in the first 6 months of this year, and a lot of that was demonstrated by a great Q3. So the teams are very committed, and we want to finish well. So yeah, we still stand by our guidance for 2017. Talking about liquidity, Zimbabwe is in a very tight place at the moment. The economy is not strong. There's a lot about that in the press, and foreign currency is a very scarce commodity. Zimbabwe operates with a multi-currency environment where they don't have their own currency apart from a small amount of what they call bond notes, which were really introduced as part of a settlement for export incentives. So the bond notes are out there, but otherwise, generally, the economy, everything in the economy is priced in US dollars, and we pay in US dollars. We get paid for our gold in US dollars. But when you want to make foreign payments, you have got to go and make an application to the Reserve Bank for them to go into their allocated pot of foreign currency, which is scarce because Zimbabwe does not generate as much foreign currency as it needs for the economy as it runs because it's US dollar based. So the process is that you have US dollars in your bank account. All our bank accounts are denominated in US dollars. You have a credit on your bank account saying you've got US dollars. And when you want to pay locally, you just send an electronic instruction and that payment takes place. When you want to pay a foreign supplier, you need to have physical US dollars in a corresponding bank. And the process of getting that in place is that through our commercial bank, we make an application backed up by commercial invoices that are all duly custom stamped. indicating that we've brought goods and materials into the country, and we request the allocation of foreign currency from the Reserve Bank back to our commercial bank, and then they make those payments for us. It is very tight, but what is very important to remember is that the gold mining industry is the major generator of foreign currency for Zimbabwe. And it's followed by some of the other mining sectors, platinum and chrome and nickel, and then there you've got the agricultural sector, which is seasonal. But the gold mining sector is the major supplier of foreign currency. And the government, the Reserve Bank especially, put in rules and regulations, and they created a priority list as to how the scarce foreign currency would be allocated back to the user. So, for example, they don't want to see people applying for foreign currency to import bottled water, and this is just my example. When there could be a miner who needs explosives to generate more gold production, to get more foreign currency. So, top of the priority list is the gold mining sector, and Blanket Mine, as a growing gold miner, and a fully indigenized gold miner in Zimbabwe, is pretty much in a class of its own. We're going to double our production, as I said, from about 40 to 80,000 ounces by 2021. We're investing. We've spent about $50 million over the last 3 years since the inception of this project, and that demonstrates that even though it's tough, the systems can work. So we will continue to work very hard, and we will continue to work in a collaborative fashion with the Reserve Bank to ensure that Blanket can have access to the right amount of foreign currency to complete this project and build a bigger and better mine for all the shareholders at the Blanket level and then the shareholders at the Caledonia level.
Fantastic. So some positive news there for shareholders and potential investors. In the meantime, Steve Curtis, CEO of Caledonia Mining, thank you very much for joining us here on today's Blytheway Mining Show. Have a great day, Steve.
Thank you. Thanks for having me.